New York is raising the roof today for the National Association of Real Estate Investment Trusts annual forum. And with REITs still enjoying success right now, investors are on the hunt for new opportunities. Entertainment Properties Trust CEO David Brain joins us with his company's Real Estate Reality. Straight ahead. Let's start with you. Welcome back. Our Realty Check continues this morning with a look at theater entertainment-related developments. Here to talk about Entertainment Properties Trust, the company's chief executive will be giving the street an update at the National Association REIT Institutional Investor Forum. But before he speaks with them, he's here to share his views and company strategy. So now with the company's strategy, first on the wake-up call is David Brain, CEO of Entertainment Properties Trust. Good morning, Mr. Brain. Nice to have you back in here again with us.
Thank you. My pleasure to be here.
You have been very passionate about growing and expanding your entertainment empire, even into other properties like recreation, as well as building movie theaters, which you do. But the word is you have a sizable project to announce. So tell us what your big venture is.
We do. It's the largest project we've ever been involved with. It's at Yonge and Dundas on Dundas Square in Toronto, Canada. We've been in the Canadian market now for about a year, but this is a very large urban vertical project. It's going to be 13 stories, 5 subterranean, 8 above ground.
So this is it, already underway?
This is it, already underway.
Okay.
It's going to connect with the subway, the metro system. It's the largest metro stop in Canada. It has riders start and stop of 20 million a year, 56 million visits to the site. It's going to be opposite Eaton Center, which is the largest retail volume destination now in Canada.
A little bit of foot traffic.
So it's got a little bit of foot traffic, a little bit of momentum, but it's going to be a very interesting project because it's really going to be an entertainment project. It's going to be anchored by an AMC 24-screen megaplex movie theater, but it's also going to combine it with, interestingly, the Canadian Music Hall of Fame. So it's going to have a very interesting attraction in addition to the movies. And then we're going to have a large Best Buy is going to put in a store under the name Future Shop, how they operate in Canada, about 50,000 square feet, which will be a music and electronics retailing. So it'll also have restaurants. We have Wolfgang Puck, Starbucks, Tim Hortons,
so you've
Johnny
got
Rockets.
Big names lining up. I mean,
do.
Is this your first development that you're really putting together from the ground up, where you didn't move in and already pretty much take over existing tenants?
It probably is. It probably is it's the earliest stage we've been in. We've been in some later stages, some build out, some additional density with some developers. This is a developer we've worked with in Canada, Penn Equity. And this is probably the earliest we've been in a project of this nature and certainly of this size.
All right, for investors in your REIT and REITs in general, or people that might be taking a look at you, when will this project be complete, and when does the revenue stream to the REIT shareholders?
Well, the revenue stream begins right away. We're going to be into the construction period as a lender, and so we'll be receiving qualified interest income during construction. The project will open in about 2 years from now, June of 2007. And we will have about a 50% interest with our development partner, and we see it as probably one of the potentially highest yields. The other interesting dimension is beyond 350,000 square feet of retailing. It's going to have 24,000 square feet of static billboards and a 2,400 square foot video board, which is going to be a very Times Square advertising stream.
Yeah.
Yes, in fact, the City Fathers in Toronto, that's exactly what they were after in creating the whole Dundas Square. And that's part of it's not only our entitlement, but it's our requirement to make this a 24-hour feeling destination.
As you know, analysts are always concerned about financing, a key part that they look at in terms of a deal. How are you doing the financing?
Financing is set up now with a 50%, $100 million loan from RBC, who's a capital partner we've done business with before, Royal Bank of Canada. They're a very dependable, great partner we've had. And otherwise, we are about half of the remaining funds, and then the last half, the most subordinate equity half right now is some pension funds, diversified pension funds in Canada.
Earning expectations from this project?
Earnings expectations, I guess, are strong. I think the impact of this will be about kind of almost 1.5 times what normal would be, because the yields are going to be very strong on this project.
You know, whenever we have someone like yourself on the program here with all the focus on real estate, we always like to, you to check the pressure gauge for us with all this talk about a bubble. Obviously, you're into commercial properties and whatnot. What do you think of this overall real estate business right now? Where are we in this game?
Yeah, we talked about this a little bit last time. There certainly are some high values in the industries, particularly maybe in office and in some of the apartment now is also reaching some new highs. But really in the development side, as again I mentioned before, we work on development costs. Construction costs are up, but they're not up anything like when you get into the bidding game for some of the properties that are being sold after their development, post-development side. I can't really tell you that they're too high. They're high relative to what you might have thought of in some historical context, but at the same time, so interest rates are low, and so what you use to discount those cash flows is lower, and you come up with higher values.
More acquisitions to come?
More acquisitions to come. Okay. We're very bullish on the remainder of the year and our outlook, from there on.
Okay, David, thank you for stopping by. Appreciate it. David Brain, CEO of Entertainment Properties Trust.